Good evening. It's August 25th, Thursday, 8:39 p.m. Welcome to the Mark You and Wawi show. How are you, Wawi?
I'm good. How are you, Mark?
Good. Looks like we have missed a couple of weeks since we last recorded. Last time we recorded, it was August
hmm
4th. August 4th. It's been 20
hmm
days. So, how's your portfolio so far?
It's recovering. I'm still about 19% off the peak
Oh, you
early
are.
this year. Yeah, from early this year, but it's catching up.
I think I'm somewhere there, 15, 20% down still. But overall, the market has been recovering for those who haven't noticed. So it looks
hmm
like it's a good sign. The title of our article back in August 4th was The Awakening Bull. So far, I guess we have recovered some of the tremendous losses we have since the start of the year. Um,
hmm
I'm glad you joined me this evening, Wawi, and so hopefully we could provide some information to our listeners.
Yes, I think a lot of the attention is going through the statements coming from Jeremy Powell.
Right.
From yeah,
I think that's gonna be by Friday, right? This tomorrow. Oh, yeah, by tomorrow we'll find out if it's gonna be good for the markets or not.
hmm well,
Yeah.
the trend is hawkish. A lot of the talk is
Hmm.
pushing for more hawkish
True.
approach.
True.
Mhm.
Actually, as we go about our weekly routine, supposedly, before we jump into that sentiment section, you're right. More Fed officials are pushing for more hikes. One of them, the more hawkish one, or the more, how do you say it, more conservative, more afraid of having loosening in the near future, is
Mhm.
favoring front loading or higher interest rates even um, for the Federal Reserve. So, according to this Bloomberg article, Fed officials push for more hikes. Bullard, one of the Federal Reserve chairman, favors front loading. So we're not far from being like tighten, loosening yet. Fed officials still think that the inflation is still the number one enemy, and in order for us to control inflation, the only way for the Federal Reserve to control that is through their tightening or increasing interest rates.
Mhm.
So we've been hiking since what? Since May, right, Huawei?
Yes, yes, we have, and we're seeing some market corrections in the
Mm-hmm.
housing market.
Yep,
How housing prices are going down.
true.
Uh, Instead of the predicted 7% increase for this year, they're looking at about 2.4% moving
Yes.
forward.
Applications are down as well, lowest I think since 2016 or 2006. So I
Mhm.
guess there's definitely a slowdown. And a screenshot that we shared in the group, our messenger group, recently, that came from CNBC. That said 72% of recent home buyers have regrets about their purchases as the market cools. So I guess those people who have tried to just buy and wavering every inspection, every little thing that they can, as long as they could get the purchase or acquisition taken place. 72% of recent home buyers have now shown some regret. So that's not a good sign overall, right?
Yeah, but they're gonna be stuck with it. So
Mm-hmm.
if they look at the long-term picture, if they're gonna stay, uh, for 2 to 5 years, maybe they can make up for it. But I understand the resentment.
Yes,
Uh,
and mm-hmm.
yeah, well, since housing prices are going down, but interest rates are still going up, so it's
I
kind of
know.
like catch 22.
So it's more hard, like it's even harder for new first-time home buyers to make make it in between like the monthly payments for the housing and mortgage with the higher
hmm
interest rates compared to last year. I think we're at least double that. And just this just came through this afternoon from Bloomberg. It says Blackstone single family landlord to halt home purchases in 38 cities. Home Partners of America, which Blackstone acquired recently for $6 billion, says it's gonna pause, hit the brakes beginning September 1. So looks like definitely some more demand coming out of the market.
Mhm.
So sooner or later, we're gonna see some opportunities in the housing market. But my opinion is like maybe it's just too early to say. Maybe, you know, as long as the interest rates are high, it may not be the opportune time to pick up a property unless you're an investor and you know what you're doing, or you really need to move into a new house.
Mhm. And then you can refinance later.
Yeah, I mean, there's always an option to refinance, and it's always better to refinance if the interest rates are low, right, Wowie?
Yeah, yeah.
Because just last year we have had like 2.7% like mortgage, 30-year mortgage, and now we are at about 5%.
Yeah, somewhere around that 5 to 6%. I
Yeah,
think it went down to 5% something.
yeah. According to the Mortgage News Daily, this is what I personally follow. 30-year fixed mortgage, it has actually increased in the past couple of weeks. We ended up today at 5.81%. So these guys carefully track the market, ongoing market among the lenders. So on average, it's still pretty high up there. Whereas last year, you could see the trend. We were hovering about just 3% even. So it's quite a drastic change. But right now, because of the pullback in the demand, so hopefully, you know, hopefully, well, I couldn't say not hopefully, but because actually the Federal Reserve is trying to hike up rates. So that's what directly affects the 30-year mortgage rate. So I don't think the mortgage rates would actually pull back anytime soon until at least the Federal Reserve stop hiking rates. So I think that's going to be at least down the road sometime next year.
So I don't know about how the housing market, housing builder
Mhm.
market will adapt to this. If inflation, housing inflation is embedded, I think we're seeing some of these changes, like products like Boxable
Mhm.
and some of these
Maybe
you know
manufactured
pre-
house. Yeah,
yeah, manufactured homes are probably gonna do okay with
yeah,
this type of market, being able to sell something a bit more cost effective,
yeah.
more affordable
More
for.
affordable. Yeah.
Mhm.
But yeah, in my opinion, it might take a while to see lower interest rates. We've seen the lowest of the low. I remember when we started our recording last year. I think it was Rocket Mortgage CEO founder said that there's no way that mortgage rates would go less than 3%, but in fact it did,
Mhm.
and we may have seen the lowest of the low. Who knows? But off we go. So now we're gonna take a look at our weekly, at least the one that we always follow. Sentiments for the stock market. Number one is our American Association of Individual Investors. They do this on a weekly basis. So this was last taken yesterday. So bullish investors came down a little bit in number. So from 33 a week ago, we are down to 27.7%. Meanwhile, bearish investors came in a little bit strong. So more people are thinking that the market will go down in the next 6 months. Um, and this is higher than the average of 30.5 compared to its history. So people are getting a little less bullish as of yesterday. And now we're looking at the fear and greed index. I think we actually touched some greed some point last week, but the fear and greed index, according to this recent recording, we're at 49. We're at neutral compared to last week's 51. So a little less uh, neutral, I guess. And the S&P 500, this is one for the chartists, those who like drawings and technical analysis. We're still hovering above the 125 day moving average. So that's about 4 months average there. That S&P 500 is above that trend, which is a pretty, I would say, a pretty good support basis. So we're a little above that. Next one with the stock price breadth. So believe it or not, Huawei looks like not much people are still buying and selling the market at this point in time. We've been trending downwards since April. So maybe the summer season is not, it's not came to an end just yet. People are still having on their vacations, and some people just rather put off their day trading or any portfolio movement.
Well, unless we're talking about last week when we see a surge in like the AMC, you know,
Oh, yeah, the meme
the
stocks.
meme stocks last week.
Yeah.
But it's down right now. News are bearish on AMC.
Mhm,
Uh, we saw an upsurge on its stock holdings APE
mhm.
just a couple of days ago,
Ape,
but now it's also down. Ape, yeah,
yeah, and
it's
also,
one way for them to raise money.
yeah, and also Best Buy. Yes, Best Buy have been like rallying upside to the downside like crazy just last week. I think it was just early this week when everything just popped, right?
Yeah, yeah, it did,
Yeah. One
and
of
like you
the
said,
Yeah, one of their biggest investors, Cohen, I think that was his last name, decided to dump all of his.
oh yeah,
uh,
yeah, that's Bed Bath and Beyond.
yeah,
Yeah, yeah,
Bed
not
Bath
Best
and Beyond.
Buy.
Oh yeah,
Yeah,
Bed Bath and Beyond.
yeah,
BBBY, right?
yeah. Ray
Right.
Cohen pulled out his stake. So it's like a game because he said he got a well, news said that he has a stake up to January 2023
Mm.
on these meme stocks, and then he pulled out.
Yeah, it's crazy because in July, in July it was just trading $5, and it
Mhm,
skyrocketed to it more than tripled in value in such a short time until mid-August. So in 15 days, it skyrocketed more than triple. And then
mhm.
from mid-August, that's when he dumped it. It's now down more than half, nearly where it was in the first week of August.
Yeah, with
So,
these kind of meme stocks, you have to watch out because you never know if what the momentum is gonna do,
yeah,
and you don't want to get caught when it's going down. So it's very risky.
yep.
I think moving forward, a lot of the experts, smart money, is saying
Mhm.
that it's really the balance sheet that we should look at
True.
right now.
Yeah,
Um,
you need to take a look at the company's balance sheet if whether they can sustain their debt payments or whether they have enough cash for continuing their businesses, regardless of what the general economy is doing, right, Wawi?
yeah, just like what we're doing with our emergency funds, we're preparing for the worst. So these companies that we're investing in should also be prepared for the worst.
True. I agree. 100% agree with that. So going back to the options market, looking at the put and call options, the higher the ratio this goes, the more bearish it is, or the more downside that people think that the market will go in the next coming days or weeks. So put call options since last week has increased a little bit. We are 5-day average is higher than the previous week, and we're at fear. Speaking of put and call options and fear in the market, did you see the report from Bridgewater Huawei that came out this morning? One of the largest hedge funds. They say that they're expecting at least 25% sell off in stocks and bonds from here on out.
Wow, that's a big um, negative scenario
Yep.
we're looking at. But that's a common theme from a lot of people that are analyzing the market right now.
Yep.
Yes.
It's a big call, and to be bearish like that.
Mhm.
I have an article here again from Bloomberg that's actually showing that most of these hedge funds, or AKA smart money, are actually betting big time that the market would go down. So hedge funds, according to this Bloomberg survey or data, hedge funds net short positions in the S&P 500 futures contracts. It's now at its highest since the start of the year. So definitely Bridgewater is putting where their mouth is, I would say, along with other smart people or smart investors. So a lot of bets wagering that the stock market will drop from here, which is a little bit scary for, investors like us that don't use options or just barely buying stocks on on an average or like a monthly average basis. So it's quite
Yeah.
worrisome, but it's hard to actually, for me, in my opinion, it's hard to copy these trades because, one thing could go to the other, and then next thing you know, you're already losing money because of these trades following the big money or smart money.
Yeah, well, looking at hedge company for performance recently, they are not doing so well either. But
That's
I can
right.
understand what risk they're looking at, with what's going on with the Chinese market. China is uh, putting a lot of stimulus in their market to um, shore up their economy. And then we still have the Russia-Ukraine crisis war,
Mm-hmm.
and of course the rising U.S. Uh, China tension regarding Taiwan, and we're still have not met our chip shortage, although there's the Inflation Reduction Act that's gonna
Mm-hmm.
help bring back to shore a lot of these chip manufacturing companies in the U.S. So a lot of these potential for growth may not be seen in the next 2 years or so. So that's the risk that they're looking at, because the current risk scenario is rather high. So
Yeah.
the chances for a recession is there, especially next year. But
Yep.
who knows, right? Who knows?
Yeah. Federal Reserve might be just playing around and seeing what works best. So it's hard to see
Yeah,
unless
but
something comes up. Yeah. Hmm.
definitely Taylor, the laureate, Nobel laureate, said that we're definitely not in a recession because of the tight job market. We
Hmm.
do have high inflation,
Yeah.
and everyone's looking for servers in restaurants. So
Right.
we really have, well, we had two GDP downturn, technical recession, but Taylor does not see a recession right now,
Hmm.
but it could happen. It could happen.
Yep. And if we're gonna take a look now at the performance of different sectors for the past week alone, energy and basic materials.
Hmm.
These are the two sectors that have been outstanding since the start of the year, early
Yes.
this year, and looks like they're back on the groove.
Hmm.
Meanwhile, the rest of the sectors are in the sell off mode, at least for the past week. But if we're going to take a look at the past month, still it's energy, utilities, basic materials. Actually, each and every sector is up except for healthcare, which is one of the defensive sectors
Yeah,
that
what we call
hedge fund.
defensive.
Yeah. So it's interesting what's happening right now. Um, these are also the reopening plays, energy and basic materials. Whereas technology again is the biggest loser for the past week.
Hmm.
So maybe because at least for the past month, technology has been bouncing back.
Hmm.
And if
Well,
we look at the 3 month performance, they've been returning positively, second best performing sector.
showing signs of life.
Mhm.
Amazon rose quickly today at 2.6%.
Mhm.
Um, Dow Jones is kind of bearish, but it rose about 0.98% today. So it's a rally, a bull rally today.
Right.
Oh, and Boeing. Boeing's got some government contracts, and it's good to see that their stock price has gone up too on the
Boeing.
news.
Yeah.
Yeah.
Industrials.
Hmm. So some
So,
life in the industrials.
yep. And now we're just looking at screenshot past month performance, 4 weeks for some major companies and the indexes. If we're going to take a look at, let's see, NASDAQ is up 7.6%. Um, The Dow Jones is up 4.44%. I wasn't able to add Nasdaq here, but yeah, some of the blue chip companies, Walmart, the best performing group, best performing stock in this group, it's up nearly 13% in the past 4 weeks. Apple is up nearly 12%. Google 9.4%. Netflix up 7.56%. Nvidia, one of the big semiconductor chip maker, it's up 6.52%. Berkshire, one of the solid blue chip companies out there, it's up, or a value play as well, 3.8%. Banks, JP Morgan, 3.4%. Even Facebook or Meta Platforms is up 3.3%. And Alibaba, you could tell there's a sudden surge of movement here in Alibaba.
That's all based on the news that they're allowing U.S. auditors to look at the company's books in the Hong Kong exchange.
Yeah.
So that's a positive sign. Hope they're ready for the audit, and that would, provide some relief to a lot
Right.
of our fellow group members that are
Right.
invested in these Chinese stocks. So you saw all of them rise up.
Yep.
Xpeng, Neo,
Baba is up
Alibaba,
nearly 8% today.
JD.com. Like I think I heard 40%.
JD up 9.2%.
Okay.
Tencent is up 5.46%. So definitely a rally in the Chinese stocks. So
Good news.
I guess as long as China allows U.S. auditors to visit them at Hong Kong and take a look at their books or audit records, we'll be fine as ADR investors.
Yes.
So now we're looking at the Chicago Fed National Financial Conditions Index. The higher this chart goes, the tighter the market is. So the more difficult to borrow money. So you could tell since late 2021 that it has slowly increased. And then starting at the start of this year, we have had sell-offs in the stock market. So as we were having sell-off after sell-off, this condition chart, tightness condition chart has been increasing until at least July 1st, or at least July 5th, mid-July. And coincidentally, the market has been rallying since then. Not until the start of this week, though. So even though that we have experienced some sell-off recently, it has yet to show up on the financial conditions index. So what I just mean, or just want to point out here is like the conditions for investing and doing business, it's still a little bit loosening at this point in time, despite the recent sell-off. But time will only tell if the market bounces back up from here, which it did today, right, Wowie? The market ended up at
Yes.
least this at this session.
Yeah. It did very well today.
Mm-hmm. And if we're just gonna follow the the fund flows that we do on a weekly basis, according to this Nasdaq article, U.S. stock or equity funds draw biggest weekly inflow in 8 weeks. So this is as of August 19 or last week. They report this every weekend. So we have seen a lot of buying, at least in the past couple months, on the last week's data. 6.85 billion worth of net buying. So a lot of which came into large and small cap funds. 2.13 and 1.4 billion came in respectively.
That's good. That's good news.
Mm-hmm.
That's a
Financials.
positive sign.
Yeah, and financials and tech saw heavy buying with net nearly 1.4 billion for financials and 1.06 billion for tech. So some good signs, some money coming in at least, right, Wowie?
Yeah. Well, speaking of money coming in, Koreans have retail investors, Korean retail investors have plowed in about 15 billion US dollars into Tesla, hoping to hit it big.
Wow. There's a lot
That's
of
a
money.
that's a lot of money.
Overseas.
Unbelievable.
Overseas money.
Yeah, for something that's have a high PE,
Right.
price over earnings, like Tesla. So it's a very risky. I guess it's risk on for the Korean investors.
Mhm. Yep. And so here we go with the, I guess this is the last part of our show today, is published by Reuters a couple of days ago. So despite the turmoil in the market since the start of the year, up and down, even further down, and now recently bouncing back up, analysts, at least surveyed by Reuters, say that the S&P 500 could actually see a little higher by the end of this year. So, well, according to this article as well, professional investors and analysts have historically had poor track records predicting stock market returns, but their forecasts provide a valuable glimpse of sentiment on Wall Street. So be that as it may, we're just taking this as a kind of like sentiment reading as well on the overall market sentiment. So, quote unquote, going into September, that's a murky month for equities, according to Peter Cardillo of Spartan Capital Securities in New York. I would suggest we could then see a pullback somewhat, but nothing that would suggest we would make new lows, because I believe the market has made a low. So I
So
guess
that's the
it's
positive news.
mhm. And further, he says, toward the end of the year, we could begin to rally. The Fed is not going to get overly aggressive, so he's betting more likely that the Fed would, start slowing down with their rate hikes. And further, I see signs of inflation coming down. And I believe the labor market will soon begin to weaken, and that should alleviate the Fed from getting overly aggressive.
Well, some good news for gamers out there. NVIDIA overproduced some GPUs, so prices of these GPUs might be coming down for
Yeah,
PC gamers.
will be more affordable to fund those hobbies.
Yes.
And even mining. Maybe some people would still use the NVIDIA for mining or cryptocurrency mining purposes.
Yeah. Oh, by the way, that's Ethereum. Is going for their merge September, so that's why Ethereum is going up. So it's kind of positive news for the cryptocurrency market. A lot of the miners are going away unless they do a hard fork, where some stay on the Ethereum proof of stake and some go into the proof of work.
Right.
Uh,
Well, only time will tell, I guess. So that's our favorite go-to saying on this episode. And just a disclosure for those who are listening for the first time, this show is made only for sharing information purposes and not to be considered investment advice. Well, I guess that'll end our show for now, Wawi. Do you have any quote for the week or advice to our listeners?
well, the only advice is to stay resilient in these times.
I agree with that. All right, well, listeners, that does it for this episode of Mark Yu and Wawi Show. Send us an email at markyuwawishow@gmail.com if you have any questions. Thank you again for listening. This is Mark Yu signing out.
Wawi Santos signing out.